Good morning, guys and girls, and welcome to this morning's video. So this morning I have three pairs on watch, and those are Aussie Kiwi, Kiwi CAD, and West Texas Oil. So my favorite of the bunch is Aussie Kiwi, and we start off on the daily time frame. So you can see from this pair that we had this move down here. We had this move down here. We had this consolidation sideways, and I was anticipating a move to the downside. Earlier in the week, I was actually anticipating a potential short-term move to the upside, and that is because a lot of the time when we have these impulses down and we have these corrections sideways, when the corrections become this wide relative to the move down which has preceded them, often we get these kind of M style patterns where too much volume accumulates and the move to the downside doesn't occur. I think one of the reasons is essentially because a lot of the sellers get bored within this long sideways correction, and then what ends up happening is we break to the upside to retest the high again. Okay, so I was looking, especially when I saw, if we just zoom in here, especially when we saw this impulse up, this correction sideways, I was anticipating a potential short-term move to the upside to potentially take out that high because this has got so wide, this overall correction. Okay, but as I keep saying, I'm not interested in being right. Okay, the amateurs are interested in being right, because as soon as they are right, in quotation marks, they start posting how right they are across social media, and that's not what the professionals are doing. Okay, the professionals are just trying to manage risk. Okay, so what I'm doing is when the wind changes direction, I'm adjusting my sails. That's it. That's literally all it is, and I'm waiting for the market to show its hand before I try and, you know, I'm not trying to guess what the market's going to do. I'm waiting for it to show its hand. Okay, so what has the market shown us now? The market has shown us that we have a series of near misses to this high here. Okay, there was a sharp move up followed by a very aggressive sell-off, particularly on a corrective pair such as Aussie Kiwi. Okay, we near missed to this area. When we near miss to it, that increases the likelihood that we will tap into that area to a large extent, because a lot of the people selling here would have had their stop losses, would have put their stop loss up here or just above. Okay, so what happens? Well, what happens is what usually happens on the higher time frame. If we're going to move to the downside, we break above, catch people the wrong side of the market, and then move to the downside, but not without a little consolidation above price in the meantime. Okay, I'm sure that a lot of people saw this as a retest to get long, so they get long, and then eventually they get washed out. But the point being that we've completely dropped out of that consolidation now, so the market has shown its hand. Okay, and one of the things that I like about this is that we are now trading back below all of these highs. Okay, so if we get a consolidation sideways, that is the market confirming, that this is just an impulse correction continuation to push lower to potentially take out these lows. Okay, or this low, and we may be able to capitalize on a move to the downside in the meantime, in accordance with our rules. You can see that we had, on what day was that? Wednesday, we had this massive dropout, okay, which put price back below all of these highs. And then if we zoom in, you can see that prices started to consolidate. Okay, if we just zoom in ever so slightly, okay, you can see that we do have this kind of, let's zoom in on the 15-minute chart. Let's try and make sense of this structure. So we do have this kind of structure here. Okay, what time was that? 1 o'clock in the morning. Okay, so we do have this kind of structure here, and you can see that 1, 2, 3. We tap into that, and we tap into it by way of a reversal structure. But one of the things that we did is we left a gap to this sharp high. Okay, this sharp move here. Okay, so potentially this is a new piece of its own. So we have the sharp move. We have this kind of structure. You can see the middle section. We have a structural approach, a reversal structure leading up to the high. We tap into it, we sell off. Price leaves a footprint again. Okay, so potentially this could be an impulse and then we get something like that, and then we move to the downside. But we do have to remember that we are trading above this high here predominantly, okay, and we also left a gap to this high here. So any entries you take here within something like this would naturally be higher risk, because this could be just a tag in, tag out. Price then comes up to tap into the high that these two highs near missed to. Okay, if we'd already tapped into that, then I would be interested in a potential move to the downside from here. But because we didn't, we left a gap. This is almost a potential trap. Okay, so what I'm going to be looking for, and you do have to remember that Aussie Kiwi does tend to consolidate sideways for longer, which does make this slightly more likely, that price will come up to tap that high. Okay, and if we just analyze this this is a prime example as well, I think. Look at this consolidation. When you see this price just building volume like that, often these just pop to the upside like that. Okay, I've seen that a lot of times as well. So what I'm going to be looking for is price to tap into the high that we near missed to. If we just suddenly break out of this correction, okay, and pop to the upside, then we potentially have this kind of expanding pattern there, okay, and then we would have the 1, 2, 3 leading up to here. It's not perfect, it's not ideal, but it's we would have a 1, 2, 3 structure leading up to the high which we near missed to, and then if we tapped into that and we rejected by way of a 15-minute rejection, then I would look to get short. What if we were back down below here, okay, below this consolidation here, below these highs, okay? That to me would confirm the move to the downside, and then I would look to get short, and then I would be able to manage this down to this low for something in the region of 2%, and then what I would be doing is I would be targeting the low of this consolidation here, okay, for something in the region of about 6%. Okay, I would use the mechanical management tool, and I would measure it from that range there that we broke down to there, and that would give us something in the region of 5%. So just a potential shorter term move. And if we measure this, so this impulse here where we started to impulse, we measure the continuation leg out, that lines up almost perfectly mathematically with that as well. So that's what I'm going to be looking for on this pair. That is Aussie Kiwi. Looking at this just quickly before I move on to the next pair, when we kind of have, if this is some kind of, expanding to lead to send us back up to that high that we near missed to, if this is the middle section, when we get these kind of a corrective move up, an impulsive middle section, we don't usually have an impulse after that, like a correction, impulse. That's not usually how it works. So what I've seen in these kind of instances is that what we tend to get, if we are going to do what I'm looking for, we tend to get something like that, where we get a structural approach. So when the middle section within a potential expanding is impulsive, we tend to get a structural approach leading up to whatever value area we've near missed to. So I wouldn't be surprised if something like that happens. And again, that ties in with how Aussie Kiwi actually operates, because it does tend to consolidate sideways for longer. So that's just the thought process surrounding this pair. So that is Aussie Kiwi. I'm going to move on now. So I've got the alert set just below that high. If it doesn't trigger, then I don't need to look at this trade. So Kiwi CAD, let's have a look at Kiwi CAD. So on the higher time frames, we have this sharp move here. Okay, we have this sharp move here. Price comes near misses to it. We then get the corrective sell-off, which is typically what we get when we near miss to a significant area. We then come back up to give us this impulse correction continuation, where the impulsive legs are of a similar length, suggesting completion. We break above, catch people the wrong side of the market. In this instance, we don't commit, likely because we had a sharp move sat just above. where there was a massive sell-off last time around, suggesting there may have been a lot of liquidity there. So price obviously needed to grab that liquidity before it could move to the downside, and that's what it did. Okay, we then have the impulse correction continuations to the downside. We then break below this low, and I was looking for. My dog has just smashed into my office door. The things that happen when you're making these videos. So I was looking for consolidation under here and a move to the downside, as you remember. But as I said earlier, trading is not about being right. I'm waiting for the market to show me what it wants to do, and then I'm looking to execute. Okay, that's it. So what has price done? It's popped a little bit higher. Okay, so when you've had a move like this, it doesn't make sense necessarily that we would just then rocket to the upside, especially as this low hasn't really responded from anything. So that just looks like a sharp pullback before a potential drop to the downside to take out these lows, to take out this low, which these lows and this low near missed too. Okay, so if we just zoom in and analyze this a little bit more closely, you can see that we appear to be getting some kind of rejection at the moment. Okay, and we also have, so what do we have on the 4-hour? We have this little running channel. If you remember, I was looking for rejections from here yesterday. We didn't get it. Okay, price moved up to the next area of value. That's what I'm not trying to call the top, because there's multiple inflection points here, but we have this running channel, and we had the dropout, and we had the footprint that was left after the break of the running channel. So it was possible that that could have been an area of value that we rejected from, but price pushed higher. Okay, it tapped into the next high, which just so happened to be the retest of the back end of this consolidation. So potentially that's an attractive area of value for a sell. Okay, so what I'm looking for, you can see that we've had, this is the first, that candle there, that red candle is the first rejection candle we've had on the way up on this very corrective move. So maybe that was the area of value, and maybe this is the market starting to show its hand. Okay, key point, show it, key terminology, show its hand. Okay, so what I'm looking for is I'm looking for an impulsive move to the downside back below here. Okay, this area of interest where there was a bit of a sharp move, and where we wicked to it as well. Because if we break back below that, we would also by default be back below this consolidation here. Okay, and if we were trending back below here and we got a consolidation afterwards, then that is the market showing its hand, and that is pretty clear confirmation to me that we're pushing to the downside to take out this low, and probably this low that all these lows have near missed too. So what would I be looking for specifically? Well, if we just zoom in, I'm looking for today a dropout. So I'm looking for a dropout below this area of interest, followed by a 15-minute continuation. Okay, and then I would look to get short on the break or within it. Okay, and then that would be the market showing its hand. I'm looking for just slightly more deliberacy, just because when we've got multiple inflection points on the way up, okay, and this is not as clear a structure. I'm just looking for a 15-minute continuation instead of a 5-minute. Okay, and then also that would negate, because we're not trading above here, that also negates the possibility that this sharp move is actually just a consolidation to push higher as well. Okay, so we've negated the buy structure as well. So that's what I'm going to be looking for. And then I would actually, in this instance, just be targeting that low there for something in the region of 5.5%. And I would actually set the take profit at the low, specifically because if I was to use the 90%, target 90% of the move, we would have less than 5% potentially to work with. And my minimum take profit requirement is 5%. So we'll see. I've got an alert set to see if we drop back below the area of interest. And if we don't, we may do, because also just noticing it on the fly, we have this little mini reversal structure there leading up to that area. So we may just drop out now. You can see the middle section within it as well. So I wouldn't be surprised if we just drop out, but we shall see. I'm not trying to be right. I'm waiting for the market to show its hand. Okay. So that is Kiwi CAD. And then last up, we've got West Texas Oil. I actually prefer the lower time frame structure of this. It's just a higher time frame structure, which is not quite as clear. Okay, so on this one, you can see that we have this sharp move here. We broke above, caught people the wrong side of the market. It was highly possible that we would tap into that, but we near missed to it. But then we completely dropped to the downside, and I've just been waiting for some kind of correction afterwards to potentially capitalize on a move down to these lows, which this low near missed to, and then we would have that impulse correction continuation to push lower. Okay, if we as I say, it's on the higher time frames, it's not quite as picturesque, but there is context behind it. So the sequence doesn't start great because we start in this kind of larger correction here. But what we do have, and this is the 4-hour chart, so it's a weighted lower time frame. What do we have? Price broke through this low here, which was the retest at the back end of all of this volume, and it left a footprint. What then happened? It came back up, it left a gap to the footprint, and then we have what we call Falcon Mechanics 101, which is where we have this high, okay, which near misses to here. We have this high which breaks above here but leaves a gap to here, and then we appear to be coming up to take out this high, which these two highs have near missed to give us this kind of expanding structure there, where we have a 1, 2, 3. Okay, and you can even see the middle section here without me even zooming down to the 1-hour chart. So what I'm going to be looking for from this pair today is the following. I'm going to be looking for, we have this little tight consolidation there. That is also what we typically see. If we're going to move to the downside, you often get these tight consolidations just before an area of value. But just looking at where this formed, I wouldn't be surprised if we pop a little bit higher to tap into this area of value. But I'm not so worried about this because this is actually above this high, whereas this is more of the retest at the back end of the high. Okay. So what I'm looking for from this pair is I'm looking for a tap into this area of value. If we do tap into that as well, great. But then I'm looking for a push down, followed by a tight continuation, a 5-minute or a 15-minute continuation. And what we also typically see is these consolidations often form symmetrically. So if there's a little consolidation to the left like that, you'll often see a pop above, pop back in, and then the consolidation that follows will often be next to the consolidation which preceded it, if that makes sense. Okay, and then I would target this first inflection point for something in the region of 3.6, and then I would target the bottom of the range. My dog has just smashed into my office door again. I don't know what he's doing. I think he's trying to get in. I would target 90% of the range, set a take profit there, and I will trail my stop loss at the same time. I don't know if you can hear what's going on outside my office. It's quite amusing. I think I'll have to let him in in a minute. So that's what I'm going to be looking for. And if we just zoom back out, which is important to do sometimes, that would be pretty deliberate for me, in my opinion, because we would then be back below this consolidation. We'd be back below all of these highs, and then I think it could be all systems go for a move to the downside, and potentially we could be taking out these lows, which this low near missed too. Okay. So that is the thought process, folks. I hope you've enjoyed this. And of course, I have an alert set there. We're quite close to triggering that. Just seeing how we responded from here. But that's what I'm going to be looking for today, folks. I will see you again in the next video. And of course, if I do place a trade between now and the next video, I will bring you that trade, whether it's a win, loss, or break even, or whether I'm still in the trade. I'll bring you that trade by way of a recap to start the next video. Thanks very much for watching today, guys and girls, and I will see you again in the next video. Have a great rest of your day.